Here comes an important call, which is let's look also at the point of view of the sustainability business and what kind of finance do they actually need. And so it's a pleasure to give the floor to Katarina Serafimova, who will introduce the panelists and moderate the session. Katarina, the floor is yours.
Thank you very much. Yes, actually, thank you to you. You seem to be the survivors of 3 days of academic talk about green finance, and you're still here. So that's the one we count on, I would say, for that. So this last panel, we have the privilege to look a bit back and reflect on these discussions around green and sustainable finance today. Which is what we are going to do. It's a bit, I was talking before, it's a bit like the choir in the Greek tragedy, perhaps, something like, we don't know if we will be heard, but we will say, at least. So, welcome, and with me, we have 3 people here. It's Maria Lamas. She's a senior banker from the wealth management part. That was not too much discussed during the conference, but she's really bringing that practitioner's view on having advised wealthy clients for many, many long years at different banks, Julius Baer, Credit Suisse. And she's here really bringing that perspective. Do really the banks today, when it comes to sustainability and even to the real world, do they speak the same language as their clients? So that is, Maria is going to be talking about that. And then we have Martin Rohner, the CEO of the Alternative Bank Schweiz. As he just said to me before, he is the CEO of an alternative bank, of one of the banks in Switzerland here. However, he has a bit of an outsider view as well, because he was not a banker to begin with, right? You have been heading the foundation Max Havelaar, so you have a link to the agricultural sector, you know the needs of the farmers out there, and not only in Switzerland, mostly in the developing countries, so you have bring in that perspective as well. And you will talk with us, hopefully, about bridging the gap between finance and the real world as well. And then we have Heiko Specking, founder of Specking & Partners. You have also worked, I think, 25 years in the sustainable financial industry. So witnessing that debate around greening, sustainable finance, impact investment, conscious finance, what kind of responsible, what kind of names you can put. You have been in all these discussions and can look back, and you are trying to, I think we discussed it before, you're trying now to advise people to really connect to what they want, and then to see what would be the concrete options that they can take in order to what to do with their money, right? So let's get started, and I would like, looking back, start from the last session we were hearing. We were hearing from the institutions, we were hearing from Mr. Steglitz about the interconnectedness and all these big risks, be it in the derivatives caused by the way the financial system is structured today, even the dimensions. I heard you saying, I think in interviews before, that banks need to refocus their activities from financial economy to some kind of a real economy. And I think the word you used was the bricks and mortar economy. So how do you, could you elaborate, reflect on the discussion that we had just before in terms of the, let's say, more systemic risks, and then what you think needs to be done?
Yeah. Well, first of all, let me say that I'm very happy to be here and that you've invited me. Maybe just a couple of words. I know that when people hear Alternative Bank Switzerland, very few people actually have heard of our bank. We're quite a small bank. We have about 30,000 customers. But I guess I can say with a certain pride that we are probably the most sustainable bank in Switzerland. And that has to do with the fact that our bank was created out of a social movement and set up to provide an alternative banking model focusing on sustainability, focusing on positive impact on society and the environment, and also offering banking services in a very fair and transparent manner. Now, you spoke about the interconnectedness. I guess for me a case in point is the fact that I should maybe say that we're not alone actually in the world, Alternative Bank Switzerland. We're in a network called the Global Alliance on Banking for Values. This is a global network that spans the entire world. There's about 50 banks, almost 50 banks in this organization. And we've been doing some research looking at how our business models, which are much more strongly focused on the real economy, how they are a lot more resilient to financial crisis. And you can see that very nicely when you look at charts, for example. You can take almost most financial indicators, such as the balance sheet. When you have these big drops, be it now in GDP, be it in terms of the business, or be it also in the balance sheet of the banks during the financial crisis, our banks just continue to slowly grow, and we were very stable. And why is that? I think for the exact reason that we were not so strongly interconnected through the financial markets with the other banking systems, but that we were really primarily focusing on our role in the real economy, which is to support businesses, which is to help finance housing, renewable energy, you name it. But we were not so much, our business model is not there to create business per se by acting in the financial markets, but really to fulfill a certain social purpose.
Do you think that this kind of approach, going back to a bricks and mortar based financing structures or business model of a bank is possible for the big banks as well, or is that just for a niche bank as you are?
Well, frankly, it goes back to the question, why are banks created? What is their role? It's a philosophical question. Do we understand banks as something like an infrastructure that should help the rest of the economy thrive, just like telecommunications, transportation, etc.? Or do we understand banks as businesses in their own rights that can make as much profit as they want to make? I think any bank can be just like our bank, but that will need some changes in their business model. Just to give an example, I mentioned profit. In our articles of incorporation, there's a clear statement that our bank should not pursue profit maximization. It's not that we don't want to be profitable. We are actually quite profitable, but it's not our main driver. It's not our incentive.
What's the intention?
Our intention, we try to be a bank in order to support something else and not just to be a bank.
Thank you. So the intention that drives all these kind of movements, I would like to add on here on that intention part. We've been hearing about actually some very, very positive movements. Just yesterday was announced that BlackRock announced ESG integration for the entire mainstream, basically everything. So that was a big announcement. We had on that conference, we saw that the SRI, assets under management, are growing and that green bonds are skyrocketing somehow. If you follow that discussion around green finance and the developments, what do you think are the main drivers behind that? Is that people really see within the industry the urgency? Is it, we had yesterday, I think Stefano opened the panel and saying actually climate change could be a win-win for the industry. What would you say are the main drivers for sustainability in finance today?
To be answered on the various levels, I think I've seen the whole industry growing in the past 25 years from very simple forms of dealing with the social responsible financing. It has become mainstream in a couple of years ago, and a growing stake of the assets under management globally are subject to ESG criteria as well as SRI criteria. And the people become more comfortable in dealing with this, understanding more of it, and there's more products in the market. So that is all very positive, and it has different notions and qualities that are added. What I don't see so much is sort of how do we get this to a next level, and not only adding another layer of criteria that we put on a company to better screen it. How do we actually change the intention what you were saying of the business model as well in terms of sustainable investing.
So perhaps adding on that and asking Maria, we were discussing before that you described yourselves as a translator to a certain extent, a translator between the needs of the clients and what the bank could be offering. When I hear what you've been saying, the question is now to put that on the next level. What kind of discussions do you remember in these areas? And is it a discussion around the urgency to change something? Is it a value-based discussion? Or how did you perceive that in your practical environment?
Thank you for that question, Katharina. I'm indeed a translator. That's not a joke. I'm a linguist by nature. I am not a banker. I'm an accidental banker. And I am not an academic. And therefore, the last 3 days, I was somewhat challenged sometimes. And just to close the gap between our little talk here and the title of the conference, there are quite some gaps that we have to close if we want to be understood and if we really want to talk about how to get sustainable finance into the real world and into the real economy. Now, there's one remark I have to make before I start, and that's that I really don't work for Julius Baer anymore, which gives me a phenomenal freedom to talk about my personal opinions. It's just a mistake in the program. I've been in the financial industry for over 30 years now, and I've had the pleasure of seeing that development and that creation of consciousness towards sustainability, towards a change in thinking. I don't think it's enough. We've seen a lot in the last few years. We've seen developments that were absolutely important. We haven't seen enough. And what I do is I detect a certain reluctance maybe of and I can speak mostly for the Swiss financial system, to actually be proactive in addressing certain issues and be proactive in giving clients, and that's something that's extremely important in my life, and I think everybody's, to giving clients and investors a choice on how they want to make their money work.
So what would be needed to give that choice? I think it's one of the topics that you elaborate a lot on, so that privilege of choice. Can you say what you mean by that?
I think there's very few situations in life where we don't have a choice. And most of the times we do have a choice. The problem is that we're not aware of that choice. And especially when it comes to investments, I've made the experience that clients don't know that they actually can ask certain questions. They don't know that they can actually address certain issues and certain values that are extremely important to them with their financial institution. Now, the problem is that if they don't know they can, because they haven't been educated that way, they will not do it. And the banks, and yours is not one of them, are typically not the ones to be, as I said, proactive and actually address those types of choices or options that the clients would have. So there is a big gap between what the client, the real economy, the entrepreneur knows about what he or she can do to know how her or his money works, and what the financial institution actually offers them in terms of option. And that's something that I believe we really have to work on massively.
So you have concrete experiences with these situations, or?
I've experienced a lot of situations. I've been in one, that's a while ago, I've been in a situation where two very wealthy individuals, two brothers, were in a meeting with us and that bank, and they had a rather small portfolio for their overall wealth with this bank. And they happened to bring along their next generation, which was their two sons. And I actually was just jumping in for the portfolio manager, who once a year has to explain why they're 0.1% below or above the benchmark, which makes every non-financial individual's face go to sleep when they just hear it. So I brought up the discussion and I started asking that next generation, what are things that are important to you? What you do for a living? What are the values that you want to see reflected in your portfolio, if at all? Do you care about how your money works? Do you care about what companies you're invested in? And suddenly, there was a different type of conversation. and they started asking questions, and they realized that they could actually ask different questions that they were used to. And I would argue that especially we're seeing a massive wealth transfer now from the existing generation and asset owners to the next one. The millennials are going to ask different questions. They are driven and motivated in a different way, and they will want to know somehow, and a lot of them want to know how their money works.
Yep.
They do realize that it has a consequence if you buy, I always say, if you buy a Coke or a Pepsi, that has a consequence both for you, it's not very healthy, and for the company, because you really make a difference there. Now, it is a conscious choice, and every investment that you make comes along with consequences. And we can actually choose what consequences we want to have as a result of our engagement, financial engagement.
Thank you. So connecting, this is about really connecting the needs of the views and even the values of the clients to what the bank is offering. What is your take on that, your experience on that? Are the banks, is the classical, let's say, sustainability approach in banks, within banks that we have been talking about the last days, how is that linking to the needs of the clients? And
Maria is already introducing 2.0. I think the discussion is not even started on the level of what's your value proposition, what do people actually care about. This is already very precise in terms of connecting with the investments, and I've seen it happening, talking specifically to wealthy clients. They get the charts, they get the numbers, and then after an hour it's basically done, then you go to lunch. If you turn it around, you learn far more from the client if you start actually having this quality discussion, if you ask about the values of the purposes, especially with the next generation. And then usually the meeting is longer, but you have far more information, you have a closer bonding to the client. So we've been discussing with clients and discovered about new investment plans of huge infrastructure projects, which actually is then again interesting for the bank to invest in. But also to see and understand more what is their personal interest and what is their personal as well fears and concerns about their family and about their wealth. So therefore there's a lot along those lines that you can discover. It's actually, research never proves, but has indicated that this sort of clients wishes the financial advisors at the first position to address that issue. Mm-hmm. They themselves wouldn't do it proactively, and the intermediary, like most of the time the relationship manager, is sort of somehow not used to ask that question, although it's common sense. And there, if we start having these discussions more with a lawyer and the client, with the relationship manager of the bank and the client, with other intermediaries who as well sell sustainable products or investment vehicles, then we can have the choice discussion, and we can also have maybe even the client to decide what sort of project need to be structured by the bank in a second thought. Because today, you see the big banks specifically, they have their own product shelves, they produce. There's some highly capable people of pulling notes together, new structured vehicles, and then the army of relationship manager has to sell the stuff. But is that actually linked to the real need, what the client wishes for?
so that is the gap that you're mentioning between the financial offerings that are designed from the bank and then the salespeople needing to sell them and trying to find the connection. And your question was, is that really matching the need of the client? The other question is, since a couple of years, I think you're also connected to foundations. You are involved in regenerative agricultural projects in several countries. So that is another perspective, and the perspective I think was mentioned yesterday also by Mr. Stieglitz very briefly when he said, although there is a lot of money there, it's not coming where it should be coming, or it should be going actually, in terms of the financing needs and the needs of getting access to financial flows. Can you elaborate on that? What would be needed in order? Is there a gap, and what could be done to overcome that gap?
Probably the luxury version, because some of the foundations who today, as you mentioned, finance and support regenerative agriculture or other agriculture methods, these are often driven by wealthy families who've started their own foundation and their own philanthropic engagement. And they see that with this sort of seed money, and that's a expression as a buzzword that doesn't fit this thing. It's just like, I say, it's rather initiating money. It's something that's money to support an idea that then can slowly grow, that at some point actually somebody can start investing in. So they support an idea, and I think if you look into so-called impact investing scene or social entrepreneurial solution investment opportunities, it's something which is very important to have that, but where does the ideas come from and how do you reflect them in the greater context? So foundations play a large role, not so much that all the foundations have understood as well their responsibility in the field, that they can actually make a huge difference in putting more of their investment strategy towards these topics, not necessarily only initiating, but also at least supporting their courses via a matching investment strategy of the assets.
Thank you. Let's stay for a second on that particular gap. So you have been working in agriculture as well, in the foundation as well, and you know a lot about, you try with the ABS, as far as I understand, to really bridge and take social responsibility to enable the money to flow into those things that a sustainable economy needs. How do you perceive the offerings of the, let's say, mainstream banks? Are they prepared to really get into that perceived gap between those things that we need for a decarbonized economy, for a more circular economy, for a more resilient, decentralized structures? And what would you recommend for that?
Okay, well, there's different takes on this question. The first one is that I totally agree with you that we need to, as banks, offer the clients a choice and engage with them. I think most banks are simply not capable. I think, Heiko, you put it very well. I think mostly it's about selling a product. And I think that's really where the mainstream banks fall short when we're talking about sustainable finance. They analyze the market out there and they see there's a client segment that wants some sustainable products, so they design some sustainable products and they sell those products to that clientele. Now, you mentioned my expertise in fair trade, so I'll draw on that experience. There's quite a few banks, including my bank, that is offering impact investing products that are geared towards supporting fair trade farmers, which I think is a great thing because they might have some investment requirements, and so we can help them finance those. But the major big banks that have that kind of offer, they have at the same time they're also engaged at the same time in derivatives related to the commodity markets that are creating speculation, which is then again hampering small-scale farmers. So on the one hand side, they're doing something which is good, and on the other side, they're neutralizing what you're doing, which is good, with something bad. So I think we have a big problem there in terms of the coherence of the business model and of the product offering. And so personally, I think most of the sustainability offers are, in that sense, not particularly credible. I think that's the first take. The other take is that I'm very frustrated to see that banks are only reacting to market demand and not realizing that, especially the large banks, that they also have it in their hands to create a new market. I've seen this, I don't know how many Swiss people are in this room, but Switzerland happens to be a champion in organic consumption and in fair trade consumption. And the reason for that is that the two large retailers in Switzerland, at least one of them decided at one point, we are going to teach the consumer about sustainability and show them that they have to start consuming in a much more sustainable way, and then the other retailers simply had to follow. And I don't see that kind of initiative yet by the large banks. I think, in fact, they're frankly a little foolish that not one of the banks takes this and becomes the first mover. because I think that's what really would drive the industry to scale on the sustainability issue. Instead, they're simply looking at the clients and responding to what the clients have always been understanding. And like you say, I think the clients aren't even aware that they don't dare ask other questions. And I think that the banks have a role in teaching and sensitizing the clientele, the customers.
So what you're saying is that there were really many things that you were mentioning in that one answer. I think one thing I heard is that many banks are today, as they are having on one side sustainable offerings and on the other side things that are unsustainable, that's not a coherent business model, is what you're saying. It's more like the soul hedging part, right? Doing good but doing bad at the same time. And the second one is the proactive versus reactive thing. I would like to pick on that and ask Maria. So if we look back over these, some of you have these decades of really being in the business and witnessing the sustainable investment space, I think that was 30 years ago, the first pioneers in Switzerland actually on sustainable investment. And since then it has been growing, but growing to in a way which is still a minor portion. What is your take on that? What drives it? We had that question before. What drives it? Is it values? Is it just waiting for client demands? And what could be done differently?
I am so grateful to Martin for mentioning that with organic produce. We're absolute world champions in consumption of organic produce in Switzerland. And funnily enough, I use that to make a point towards the banking industry. And I say, when I walk into a shop and I buy bio-eier, organic eggs, I buy them and maybe they're even more expensive than the other eggs. But there is a reason why I buy it. Who of you actually buys organic? Well, there you go. You take a choice. You know exactly what you're doing. And you're even willing at some point to pay more for that. And when discussing sustainable investments, options, choices, and the right questions that we needed to ask clients, there always comes a point where I say, yeah, but you know, clients, they're so cost sensitive and that's too expensive. Because some of the impact investing products are slightly more expensive than others, and there's a good reason for that. And I always said, okay, you buy organic, you pay more. You buy an impact investing product, you buy a fair trade fund, that's going to cost you a bit more than your usual fund or ETF, but you're asking the right questions there and you're reflecting your value. So there is a reason why you do that. And suddenly, and that's an experience I've made, the so-called cost-sensitive clients, they change around completely and say, okay, you know, all the commodity stuff, I'm maybe going for some cost sensitivity, but there are certain things out there that are really important to me, and for that, I'm absolutely willing to pay a little more. And I've experienced that. Maybe one thing about the foundations, there are situations now where foundations, big ones, important ones, are approaching banks with so-called beauty contests. So they say, I have $1 billion, and I'm looking for a bond portfolio, or I'm looking for an impact investing portfolio, and then they would go and check the banking landscape and then choose a bank depending on their offering. And you should see the hectic activity that this causes within the banks. And most of the time, large banks and important banks, which is a real shame, are missing out on those opportunities because they've got nothing to offer. So the pressure is rising, and it's brilliant, and it's wonderful to see. But you ask me, what have we seen in the last 30 years? We're still preaching to the converted, meaning we don't obviously speak the language that we need to speak. We're using the wrong tools for communication, and we're all operating, and I say that very self-critically, that's for the banks, we're operating in this little microcosmos where we understand each other and we have a very intrinsic way of thinking. Academia, I must say, don't take it personally, it's another microcosmos that takes a very intrinsic view on what they do. I think we need to change the language, we need to translate, this is where my background actually comes in handy, and we need to start to understand each other and create that sense of urgency. Because the last 3 days we've been discussing about how climate change is dramatically affecting the planet and its consequences. Okay, there is a group of people here that might agree. There is an equally large group of humans out there who does not agree with that. Okay, and especially on a political level, we're dealing with that kind of challenges today, that we're actually walking back decisions that have been taken and measures in the last decade. And I think we really need to find a language where we get understood as a financial industry, as academia, to get to where we want to go. And that is, you know, sustainability doesn't mean a radical revolutionary change of the business model of the bank, but it needs a gradual rethinking towards the right way of conducting finance. And this is where I think the financial industry has decoupled a bit from the real economy, and that's what we're talking about here.
So bridging that gap, real economy, what is needed?
I'm not sure I quite agree with you on the last point you made, because I think I agree that we can't change the industry from one day to the next. That's clear, because then we'll have a big breakdown, whatever. But if we don't address the issue of profit and profit maximization, we're not going to move forward. You can have the most enlightened CEO, you can have brilliant people on the board. Nothing's going to happen if the shareholders are still expecting a return on their investment of 15%. And if you go look into the annual reports of the big large banks, that's what the return on equity, that's what they're expecting. So, in fact, I think we are in a very comfortable and luxury position that we have about 6,000 shareholders, but we're not publicly listed on the stock market. And all of our shareholders, they're mission driven, and they want us to do good primarily, and then maybe they'll also have some dividend. That's fine with them. But I think we have a big problem, which is the stock market. All the stock-listed banks, they have no chance of really being truly sustainable, because the stock markets, it's probably the biggest market failure we have in the world, because it's only risk and return, risk and return. And we heard it yesterday in the panel discussion with Joe Stiglitz. We don't have the right prices. The environmental price, the external, the environment is not internalized into the pricing, and therefore the stock markets are simply not functioning correctly.
So what is coming up is I think Graham Maxton mentioned that our addiction to growth, right? He said our addiction to return and growth. And that requires some kind of out-of-the-box thinking and really speaking a different language, but having a different intention. Heiko, how do you perceive that? What could trigger that, and what is the fear? Where is it possible to get out of that box? What would be needed?
Regulate a little bit the, you mentioned the banks. They're incentivized by a clear system. And within that system of remuneration mostly, it's very clear it's a maximization of profits, and it's not an optimization of return, which could also be perceived. I think there, from my experience, there's a big blockage of really change, because if you talk one-to-one with some senior bank managers, they get it. But as soon as they come into their boardroom, they come into their meetings, they have to adapt to the system which is implicated in the bank. So I think there is room to maneuver to get out of it. And generally to understand more, and that comes back to the BioAg, to understand more why you pay more for the impact investing structure, why you may pay more for the AG. There's value that you actually buy, and it has a cost, it comes with a cost. Apart from that, a lot of the agriculture has no true cost yet, but that not get somewhere else. And then the same, you have a social benefit that actually stabilizes over time and whole economy, which sustains our way of living. And then the other thing is growth necessarily isn't bad if you grow in a good sense. And if there's a lot of growth sort of also always perceived as like build a new building, have the new watch, accumulate more money. Why isn't growth as well defined in a different way? There's been a lot of things seen in history where people started growing from within, still growth. and to start having this as a dimension into the whole discussion.
Thank you. So the incentive structures you have been mentioning, the short-term focus, and the key question that I'm hearing is what are the things that are at the source of the problem, like the growth and being bound to the short-termism of the stock market, things that need to be changed on a level which individuals can't. So for now, we don't have a choice, or those individuals within the system don't have the choice to change it. And then there are things which individuals can change. I would like to stay a little bit before we open, then I think you can witness here the 1 hour, and when it's a little bit more than half, I will open and let you come into the discussion again as well. But I would like to stay a bit on that thing. What is it that we all can, independently on which part we are in the system, take responsibility and act, and which are the parts that we need some kind of a more collective change of the system. And yesterday there were very vocal points and opinions. I think Graham Maxton then said we need a state and we need the state to come in. And that was coming from that side. My question to you is, what is really hindering people to start? Is that the lack of political will? Is that, and yeah, perhaps, so those parts that need to be regulated. And the other part, the second part that we heard over the entire conference was the one about measurement, right? So we need metrics, we need measurement, clear measurement. And I think for the last session we heard that we need a lot of academics engaging and having better matrices. That was one of the outcomes. What is your take on those things? What is really needed?
Clearly, we heard yesterday that at the end of the day, we probably have all the instruments in place, and it's usually a matter of political will. I think it was Stefano Battiston that said we need to have good measures in order to be able to act. And frankly, I think it's nice if we have good measures and we can control whether what we're doing is actually having an impact. But sometimes you even have to act without having a good measure. And I sometimes think we're spending too much time thinking of how we can do things even more perfectly instead of simply doing it. In the case of my bank, we first had the political will, and only later we started measuring. To give an example, we have very stringent exclusion criteria, and we've put them in place pretty much the day the bank was founded in 1990, so more than 25 years ago. And only last year we've come around because of this whole discussion around carbon and climate. We were the first bank that has published the carbon footprint of the entire investment portfolio. And what we realized is actually that our investment portfolio that we're offering to our clients is in line with the 2-degree climate goal. So without even knowing, we just knew north is kind of over there, so let's head north. Even if we didn't have a GPS, we didn't have a homing device, we didn't have a radar, but we just kind of followed the compass, and it seemed like we were walking in the right direction. And I think that's really the message. At the end of the day, you need to have political leadership, whether it's at the public level, whether it's at the level of companies, at the level of banks. That's what matters.
So perhaps the question to you, the metrics discussion and that strong approach, we need to measure that, we need to bring in transparency is one of the words. What is your take on that?
I totally agree with you, and you took the words right out of my mouth. I was actually astonished yesterday to hear that the prioritization of metrics. I totally agree with you. Sometimes you can't measure things. There isn't any set of data that you can base your decisions on, but you know you're doing the right thing. And I think this is where we have to start. And we don't need data to start thinking about the consequences of what we're doing, the consequences of how we're investing. So I would not prioritize metrics. It is something that comes along when you've acquired experience, and then you can put it into some sort of framework. And you're all more experienced than me in that field. And second, and I'm torn about the political will. Obviously, it would be marvelous if we had a political environment where we could count on to actually translate the situation that we're seeing now with regard to climate change, for instance, or sustainability overall, into a regulatory framework and into policies that could actually then be acted upon. Now, my trust in the political elite is a limited one, and I'm pointing out to the United States right now, where I said we have a government in place that simply doesn't believe that climate change is happening. So we can be talking about it as long as we want, but there is a certain set of individuals and politicians out there who will not translate what we're talking about into policies, who is not even believing what we're saying. And therefore, I do believe that sometimes you must act despite the lacking political will. And therefore, it's our responsibility as individuals. And there is one institution that I believe should be held much more responsible with regard to education, and that's the school system worldwide. Because there isn't a single subject that I know of in the planet, even in primary school, that prepares you for the financial decisions that you will have to take. I don't think that it's being taught how a mortgage works. And yet, some of us will have to take a mortgage or will want to. There isn't a single subject in school that teaches me that when I go to Martin and open an account, that I have to take certain decisions. And what will those be? Therefore, we need to educate our children to make them understand that their financial decisions are important ones and to give them the tools to be able to choose in the future. So political will, politics usually is a 4-year term thingy, and then it changes.
Okay, thank you. And also thank you for the remark on the financial literacy. Would you like to?
I totally agree with you. When I meant political will, I meant it not in the sense of politics in public, but rather the political will of the founders of our bank to move ahead.
So leadership, basically.
Just like what you said, irrespective of what's happening around them, we know what's right and we're going there.
Yeah, so the leadership question, I would like to turn to you perhaps as a last statement here before we open for the questions in the round. Leadership, I think you have made a study around that, and
Yeah, we've done a study in 2 years ago in Switzerland with 10 of the larger companies, and we interviewed the CEO, the head of sustainability / public affairs, and HR, and said what is needed to really implement responsible leadership within an institution. And the outcome was, and it's not really surprising, but this was said by everybody, is it needs to be a very clear commitment from the top, long-term, authentically lived, and the budget need to be secured. And as soon as you roll it out, you have to be aware what this creates, what sort of bubbles you create in the bottom of the structure of the institution, and be very carefully in taking those bubbles, those comments, those opinions back into it, and then it becomes
so that's the learning part.
So it is a learning part, but then you can shape the future strategy with the engagement of all the people, at least those opinion leaders in terms of sustainability within the institution. And I think that's very strong to move and transform an organization. And it's, for me, in this country, is very interesting to see in terms of sustainability is the Berner Kantonalbank with Antoinette Hunziker, who has started to be very clear in bringing in this notion of sustainability for the whole bank, how this is going in the long run. So there I think it's very clear to make this commitment and not only make it for selling purpose. Mm-hmm. The other thing is what you said earlier, Martin, and agrees a little bit with as well, Maria was putting in, coming back to the supermarkets introducing biofood. There's been something happening that supermarkets have not anticipated within the whole movement, which was the local food dynamics. And that was something globally and phenomenon that people started wanting to consume stuff from the area. And there was a movement starting from England, which then was successful in San Francisco, and basically changed huge percentage of the shelves in supermarkets to the day. And within very short time, the supermarket chains globally had to have logistics to actually be able to provide the consumers with stuff from the Zürcher Oberland and surrounding areas. And I think we should challenge the banks on that, on something that they wouldn't expect, but that's what we really need, and there's a benefit for us to that. Mm-hmm. And the local thing is a dynamic. The consumer, the empowerment of the consumer, with the education as well, can help to make that change.
Can I add something to that,
Sure.
Katharina, if you allow me? And one thing is, as you mentioned on the leadership issue, and I used to believe that we could actually lead change bottom up. I've changed my mind quite dramatically in the last few decades. We need the top down as well. We need people out there to stick out and to clearly voice their opinions, and we need true leadership out there that is long-term oriented. And just one example, Larry Fink, the CEO of the largest investment company worldwide, about a week ago issued a letter to the CEOs of the companies that BlackRock, that's his company, is invested in. And he was actually pointing out that companies sometimes forgot that they don't only have responsibility for financial performance, but they have a societal responsibility, and that they should not forget about. Now, how exactly he's going to translate into action, we don't know. At this point, I would argue it's not even relevant, because the financial industry is buzzing with that. And they're all saying, oh my God, Larry Fink is actually pointing out something that is pretty obvious, but nobody was talking about. I salute him for that, and I do hope that he will be more concrete in how BlackRock is going to translate that into action, and that will trigger other CEOs, other exponents, other political figures to actually start addressing the things that we need to address.
Thank you very much. I think that was pretty much summarizing actually what we were discussing. It is about a top-down and discussion, or a top-down discussion on those things that we should collectively change, and that's standing up and also mentioning the growth issue, the return issue, the short-termism and these kind of things, and at the same time not hiding behind these things and the political will discussion for not taking the responsibility for leadership, right? That's what I'm hearing. So yes, triggering that public debate and not waiting and for taking individual leadership. This is pretty much what I'm taking home. And what I also take home before we open here for your question is that there is a need of really, if we want to close that gap, it is about reconnecting, such as the supermarket needed to reconnect to local farmers. This is about many, many levels, that this unconscious break between the financial industry and the economic or the real world economy and people needs to be bridged, and that's where some of the measures that we have been talking about would be needed. Now let's open, and I will try out this one, but I can't read it. So can you read it?
Yeah.
Okay. So we get the first question.
I'd like to say something to the first question. The question is, what kind of real economic activity or trade can be identified as a sustainable finance product? I'll just answer to that first part, and maybe my colleagues can come in on the other one. When I'm often invited to talk to people about this topic, sustainable finance. We're talking all about sustainable finance, and the problem I have is that there's no such thing as sustainable finance. There's only more or less sustainable finance. If you look at the statistics of the sustainable finance industry, every year it's billions more. We're hugely successful, but somehow we are still not managing to save the climate, right? So either the metrics on the climate are wrong, or then maybe we need another classification system. I think the problem is that there's a lot of greenwashing. Very quickly, if there's a couple of exclusion criteria that are not particularly stringent, it's called a green investment. Just to give you an example, in our case, we exclude clearly, for example, airlines from our investment portfolios. In other cases, another bank might say, well, we have a best best-in-class approach, and so we simply use the cleanest airline. Now, you know, there's miles difference between those two strategies, and I think that's really the challenge. That what at the end really matters is that you look carefully, and it's also not so easy sometimes because you have trade-offs. A product might be good in one dimension, but maybe not in the other. That's another challenge that you have.
So many shades of green, so that the pure green is or sustainable is not existing. What you're pointing out is the relevance of following a process rather than some kind of absolute judgment. Is that
correct? And I think it's very often a value judgment. I'd like to give a case in point. For us here in Switzerland, we have very little land, so urban sprawl is a big issue in Switzerland, and we started excluding projects that contribute excessively to urban sprawl. And we introduced an instrument to analyze the projects, and then we made an analysis of our portfolio, and it turned out that the worst offenders are the ecological houses, because they're very often built on the green field, right? Contributing to urban sprawl. And I think that's a very nice example that shows that there's not a perfect solution, but very often you are in these conflicts and you need values, you need a framework of values against which you will then look at this and make a judgment and take a decision.
And this is also referring back to what we said before about not staying in your own environment, but really talking to people and going into the connection with those people that have that are on the other side of the real economy, right? And to make that judgment,
absolutely.
and NGO and other.
Can I add
Yes.
something to that? Maybe I think one of the problems that we're finding is that there is very little common understanding and the common denominator on what we talk about when we talk about certain things. And there is a complexity to the whole sustainable investment environment that makes it really, really difficult to address clients. And when we're talking about SRI, ESG, impact investing, value-based investing, etc., there are very, very few people, even from the financial industry, you know that would actually be able to exactly tell you what that means. And we have to take complexity of that. We have to find a common language. And there are several institutions out there who are producing masses of paper. Also, one of the questions is about measure impact. How do you measure impact? There is the GIN, the Global Impact Investing Network, that has produced extensive research on how to measure impact. There are the different companies themselves, like Responsibility, who have certain reportings on how they measure impact. But at the end of the day, we haven't created the common denominator that is large enough for us to understand what we're talking about. And that's a challenge for the industry, I would believe, and that's a challenge for the Sustainable Finance Switzerland organization, I believe.
So you're arguing for reducing complexity, not only in the derivative space, in the interconnectedness of the system, but in our day-to-day language, that when we explain sustainable finance, that's what I'm hearing.
Yes.
Yes.